Why is inflation good for real estate? In this video, I'm going to talk about that relationship. Inflation, real estate, all that good stuff. Everybody hears it, but don't be embarrassed if you don't understand the correlation between that, because for a long time I was like, oh, whatever. I'm just going to buy real estate, which isn't a bad strategy, actually. One of the things I see a lot of people do is they get caught up in the how and the why and not the do. We got to do this. So in this video, I'm going to show you why inflation is talked about in such a beneficial factor when it comes to real estate on that. That's why when inflation hits, it's interesting, but if you've got real estate, it's not as bad as you think, okay? It's actually a good thing. Oh, by the way, stick around, okay? I got a bonus for you. Stick around to the very end. Hit the like button, write any comments you have in there, whatever you want to do. Send this to a friend. Help the channel out, so to speak. I'll be more than happy to do more and more videos, the more and more interaction I get. Inflation is the cost of goods, period, end of story. So if it costs me more to build a home, as a builder, I may slow down my build, depending on how much more it's going to cost. We'll talk more about that in just a bit. If I'm slowing down the build because it's costing me more, then there's less inventory out there, which is exactly what we're faced with at the time of this recording. We don't have enough homes, believe it or not. So that means in order to get a home, because I'm a buyer, I've got to buy a home, I have to go into the used house market. So I'm going to go into a home that's already existing and buy that. That means other people are doing the same thing. So that's going to drive up those prices because, again, it's just economics. If I've got more people chasing less products, prices are going to go up or at least stabilize. I'm seeing a lot of that right now where prices aren't necessarily going up, but they're not going down either because people are just kind of a wait and see attitude on it as of this recording. So you've got all of these factors that push into that. Now, when you've got high inflation, you got the Federal Reserve that's trying to stop the inflation or slow it down by increasing interest rates, which is another factor. People are like, I can't afford that house anymore. Not only is it more expensive, but the interest rate to borrow the money to buy it is even more expensive on that. So those are the factors. That's what you're looking at, why inflation is kind of good for it. If I'm buying property, let's say I buy 5 pieces of property, and I bought my last one 5 years ago, those things all are worth more money. Here's the other thing. My cost basis on those is kind of the same, if you will, but I'm still collecting rent on those properties. So the value of those real estate, the 5 pieces of real estate has gone up. My rent has gone up. So my return on investment, overused term, my ROI, return on investment, has gone up. And that's why there's that long-term play on this, and inflation's kind of driving that. This is why you hear me say in some of my conferences, I've always regretted selling a property 5 years later on this. So that's why it's such a good thing for it. I hope for inflation, okay, but it's not a bad thing. But here's what I don't want you to get caught in. I don't want you to get caught in the excuse of, I'm gonna wait for inflation to buy a piece of real estate. It's always a good time to buy real estate. Real estate is about the deal. Can you buy it for a good price? That's the bottom line. If you can buy it for a good price, that's the time to get it, irregardless of whether real estate price or inflation has gone up or down. Now, are there ways? Is there a double secret, Vulcan mind melt way to get properties at a deep discount on that? Yeah, there are. Okay, you can go out there and try to find distressed property. That's one way to do it. Again, but you've got an inflationary factor there too, don't you? How's that? Well, if you've got everybody trying to buy that distressed property, what's going to happen to the price? It goes up. So your margin profit in those deals starts to go down because everybody's trying to do the same thing. Here's the other thing I see people do. They get locked into, I must buy, fix, and flip. Buy, fix, and flip. That's a lot of stress. You've got time factors working against you. You've got inflation working against you with the cost of products to fix it, to flip it. You got interest rates going up, so people might not be able to buy it. There's all these other factors. One of the sure things to make this happen is buying property at a deep discount. So they've got probate out there. You've got foreclosures out there. Here's something nobody's looking at. More people, unfortunately, are passing on and dying And the errors, there's no errors there, or they don't care. You'd be surprised at how many, I think you'd be shocked. I was, because I saw the numbers going like this over the last 6 or 7 years, where I'm getting a lot of properties at tax sales, and nobody's been paying the taxes because they're dead and the kids haven't been paying the taxes on it. So we end up with these properties that are like, we don't care. Something to the tune of like 34 million homes a month are going on. A surefire way to do this, though, is you've got to look at a thing called tax liens and tax deeds. And those of you who've been on my channel, you know all about this. But tax liens and tax deeds are a great way to go back in time and buy those properties before the prices went up. So an example would be, and I'm just going to really kind of encapsulate this. A tax deed is you're buying the property from the county for the back taxes and whatever bid price you've got on it. So let's say they've got, I don't know, there's one we're looking at right now that was $6,000 in back taxes. It's worth about $436,000. Now I go to that auction and I bid it up to say like $150,000. I'm the winning bid at $150,000. I may have a few $20,000, $30,000 worth of rehab on it, but I own that property, okay, substantially less than it would have cost me to buy it in the retail market. Sometimes, 50, 60% of fair market value. I really don't want to, in my industry, in my tax deed buying, I really don't want to be a lot less or a lot more than 60% of value. That's where I find the sweet spot. And what I've done in that whole scenario is I've been able to buy that property literally like in a time machine. And then immediately when I get it fixed up and rented out, the value's up here. I've got built-in equity. I got great ROI, return on investment, if I'm renting it out and what have you. Or I can sell it, or even heck, I can wholesale it at the very beginning if I need cash right off the bat. So, I mean, think about this. If I buy, let's just round the numbers, a $400,000 property for $150,000, I mean, I got $250,000 of equity in there. I could wholesale it with a $100,000 profit and make some money. I could fix it up and rent it out and make some money. I could fix it up and sell it and make some. I mean, I'm not locked into any one scenario. The problem is when you're buying, fix and flips, that's what you're doing. You're buying, you're fixing it, and you're selling it. Okay, everything's got to be lined up perfectly in that whole scenario, and you better hope that the prices of materials don't go up and your time frame on that is all good to go. So there you go. Now, I've got a surefire way to do this. So if you'd like a little mini course for free on buying tax deeded properties free and clear with no mortgages or anything on it for pennies on the dollar, just hit the link down below. It's called higginsmethod.com. I'll walk you through that whole process in this brand new course that I just put together. I think you're going to find it very valuable for you and your family. This is Saen Higgins saying God bless and good luck. We'll see you out there.